The U.S. is currently enforcing sanctions, which are a form of economic warfare and have significant implications for the dollar. In other words, people are attempting to leave the dollar system, which is currently being altered. India is dealing directly with Russia, and holders of dollars and designated assets don't want to hold those dollars if they fear being seized, and so on. What is happening now has happened numerous times before, and I learned this in my past. Since I was a clerk on the floor of the New York Stock Exchange in 1971, President Nixon said, "We're not going to give you the gold that the dollar is backed by," and we had a devaluation. This caught me off guard because I had never experienced the currency devaluation. When I studied history, I discovered that the exact same thing had happened on March 5, 1933, by Roosevelt, and it had the same effect, so I realized then the significance of history before me. Studying the Great Depression helped Bridgewater, and I foresee the 2008 financial catastrophe. Therefore, what is occurring now is quite important. The history serves as a guide for the present. As the international order is about to be challenged, that is, when one major power challenges another, there is a greater chance that some form of conflict will break out, and there are 5 different types of war. A trade war, a technological war, and geopolitical influence are all present. A capital war. It's not the stock market, so the book takes you through the stock markets during war periods, and the only thing that matters for stocks is the cash flows. However, as you get into the conflict, that's a different story if you start to see those who are affected by it, which we're in the middle of, and then there's a military war, and those things drive countries to be self-sufficient and independent, and as a result globalization diminishes and nationalism increases. For instance, individual events have an impact on tax stocks, but in any case, when you ask how it affects the markets, the answer is that it has a fundamental impact on the value of money. For example, when you run very large deficits, you have to spend a lot of money on defense, social programs, environmental programs, and so on. When you spend a lot more than you earn, you have to print money to make up the difference. The 2 currency devaluations that occurred prior to 1971 resulted in the inflationary period of the 1970s, and the stock market is one example of this. Yes, the stock market rises and other things, but cash is worthless, and people start to realize that the bonds they own yield negative returns, which causes the value of money to fluctuate. Consequently, money is invested in other assets that generate income. More inflation and you start to enter a certain kind of environment, and the environment we're in is starting to resemble that of the 1970s. There are 2 ways to deal with debt. You can pay it back in hard money or you can pay it back in soft money. Well, whenever that was done in the past, it was eventually abandoned and you had to print money, which is what 71 was, which was what March 1933 was, and I believe that's what you're dealing with. To consider is the worth of money. How much money is in debt instruments, and do you want to own that as an asset? How do you diversify? The system also needs to deal with the question of what money is, and will the dollar continue to be the same kind of reserve currency? Then you see the emergence of alternative currencies, and we're seeing a variety. I believe that different types of money will compete with one another in the environment we're in, whether it's cryptocurrency, gold, or something else entirely. Other things, perhaps the digital RMB will become a rival to the US dollar. We'll enter a situation where people will consider how much money is held in debt instruments and other debt assets, as well as how terrible the returns are. Is crucial, in my opinion. Since all currencies have a lot of debt, there will be a lot of printing when you compare them. After all, currency equals debt, so when you own one, you're holding a debt instrument, and as a result, all of those will lose value in comparison to other currencies. You're going to see more of China's RMB being used, and you're going to see India have a direct link with Russia on the currency, so there's going to be a significant change in the currency. However, how that is a store of wealth is a different question. Will the dollar decline more than other currencies? It's almost a given that we're going to enter an environment where those currencies are shifting. It's sharp, I believe, that you are altering the definition of money and the dollar as a store of wealth. We are starting a paradigm shift. The old of wealth is now a problem, especially for the dollar, but it is also a problem for other countries. As a result, you have inflation as money goes into other things, and the cost of borrowing is so low in comparison to the inflation rate that it encourages the borrowing and selling of money, or, to put it another way, not holding financial assets like that. Change, a paradigm shift, is the transition from one mindset and its positioning to another mindset and its positioning. For instance, the mindset we adopted was that inflation was low, that when you own bonds and cash or are operating in one way, you don't worry about it, that businesses don't worry about it in their inventories or have larger inventories, that homeowners don't worry about inflation as much when they buy homes, and so on. When that change starts, a reinforcing dynamic, you see behavioral shifts that reinforce that cycle in the paradigm, such as when bonds are sold, which makes it more inflationary in and of itself because the amount of debt that must be sold is not only the deficit but also the amount of debt that is being sold as those bonds. It's as if everyone is long bonds, and we've been in a 40-year bond bull market, so it's been okay to have to rise significantly, or the Federal Reserve must intervene and purchase more, after which you receive wages, wage settlements, and other things. As a result, a paradigm shift is starting to occur, which will also be self-reinforcing, and it is occurring in the context of the conflict, which subsequently leads to the breakdown of efficient systems. Each nation wants to be self-sufficient in order to protect itself, and in doing so, the system's efficiencies are reduced, and all of that becomes. It's self-reinforcing, so it's happened before, it's happened many times before, and yes, I'm worried about that. When you tighten money and increase the return on bonds and cash, it makes other assets less appealing, especially risky ones like tech stocks and the like. This creates that squeeze, yes, but it's still only at 2% or slightly over 2% with an inflation rate that's significantly higher than that. We've had a 7% inflation rate, it's likely. The Fed will be in a very tough position in a year because inflation will still be high and it will start to pinch both the markets and the economy. The issue is that if you're borrowing more money than you're lending and you have a lot of money, you're still losing that money to inflation despite the Federal Reserve tightening sufficient to deal with inflation. They have to choose between paying off debt with hard or soft money, which creates a very difficult trade-off. What can they do? Spend less money, which makes the trade-off even harder. This is what leads to a stagflationary environment because they are trying to balance those two undesirables. In other words, they want to keep inflation under control, but too high of an interest rate that is good enough for inflation creates an excessive amount of economic environment. Consider holding a bond. Now, look at how much money is in bond funds and cash. Well, in cash, you don't get any return to offset the interest rate, and in your bond fund, you get negative returns. How does that feel? Will you keep holding those bonds in that bond fund? Dynamic spending more than they're earning creates a lot more debt and other debt, and one man's debts are another man's assets, and the holder of those assets is losing money. That they have to deal with that is really beyond their capacity to deal with it. They can't change those fundamentals. I think that most likely what we're going to have is a period of stagflation. And then you have to understand how to build a portfolio that's balanced for that kind of environment, so every investment is an exchange of a lump sum payment for future cash flow, and so the cost of money is a consideration relative to the return on money. And so when we look at that return, when we say, I can hold cash, or I can hold a bond, that alters the tendency to hold cash, but you also need to consider the expected return on equity. To put it another way, you calculate the present value of future cash flows and estimate what those earnings will be in the future and how much they are worth. At the moment, stocks are expected to yield returns that are not much higher than bonds, which would also be not much higher than cash. As a result, You might ask why you should own stocks further out in time, given the volatility of stocks. The relationship between cash bonds, and stocks, as well as the relationship between corporations and the rates at which they can earn money and borrow money, have a significant impact on the economy and the markets. Therefore, while it's important to examine the relationship that the yield curve structures in that manner, you should also consider the returns of other assets and consider what you can do to generate returns in relation to the costs of money. The instrument's relative attractiveness in order to have an economy where people feel that you have a fair system and productivity. I would say that the most important thing is to redistribute opportunities to make people productive and to eliminate or reduce internal conflict, which can be very disruptive when you see large wealth gaps and economic problems at the same time. Internal conflict is bad for the economy and it's bad for people's lives. Bad socially, but it's not just the wealth gap that results, it's also the productivity level that follows, and it's undoubtedly going to be a political issue. For instance, when we discuss markets, the economy, and all of these things, we must recognize that internal conflict will have a significant impact. The world order was established in 1945, and a civil war can start a new order inside a nation. The Chinese Civil War started their new order in 1949, so it's like a fresh start every time they wars, and a war is a battle for the way the system functions, so we'll start there. After the battle for the way the system functions, it's a great leveler, it eliminates a lot of debt, and it starts over. Then, a new power emerged in the United States, the American World Order, because the United States won World War II, had 80% of the world's gold, which was money, and had nuclear weapons, which gave it the dominant military power. As a result, we started the American World Order. There is a shift in psychology that you're dealing with because these things frequently take a generation or longer to occur. The world here are the borders, this group gets this piece, and so on, and so forth, and then they begin. By the way, this has happened repeatedly throughout history. They start with those new rules of the game, and you enter a period of peace and prosperity, and it's peace because nobody wants to fight the dominant power, so the dominant power won. A lifetime, and those who join the war do so with such audacity, but everyone who joins the war and then experiences it wishes they had never done so because it is so awful. However, when the war is over, they want peace, they want productivity, and so on, and it's a great leveler, less wealth gaps, and so on. They collaborate well and create a period of peace and prosperity that lasts for a long time, but during that time, more and more prosperity occurs and people bet more and more on prosperity, and as a result, debt levels rise. Naturally, prosperity comes in unequal ways, and some people become richer than others, which leads to a rise in wealth gaps. These wealth gaps then exacerbate opportunity gaps because the wealthy have more resources to educate their children and enjoy the benefits of prosperity. This happens over time as the economy becomes more indebted, and naturally, other nations also rise over time. The classic ingredient is that the winning nation also holds the world's reserve currency because those who may have even lost the war, like Germany and Japan, rebuild and become competitors, making the unique power of winning the war less unique as competition increased. And then you have a new generation of people who have a different mentality, get used to those benefits, and, let's say, are less cautious in their financial behavior, and so on. The winner of the war receives the world's reserve currency because everyone believes it to be the most stable and they also want to save in it. Therefore, I believe there are three main forces to watch, and when you see them in their cycle, it's obvious. Are you making more than you are spending? I want them to look at it as the country, but the country is nothing more than the sum of the. Therefore, I want to make sure that those three forces are clear so that you can see where you are. Is the nation making more money than it is spending and saving, or is it spending more than it is earning and creating debt? Because one man's debts are another man's assets, and when someone is holding those assets and producing a lot more of that money in debt, money loses value as they produce it to produce that buying power, which then gets people poor returns. It creates more inflation, which leads to people selling their cash and bonds, which raises interest rates. This leads to stagflation, which raises interest rates because you know that cash is worthless and you don't want to hold it. That's one of those three facts, so you can see it happening. The second force is the internal conflict force. How are you all getting along? Are you all working together? Are you all on the same mission?